Welcome everyone to another No FOMO Charts live stream. Today is August 1st, 2021. This video is all about stocks and crypto charts. Remember, this is just technical analysis education. This is not financial advice. I am streaming live on YouTube and Twitch under the handle at No FOMO Charts. No FOMO Charts. Thanks so much for watching and following, subscribing, everyone. So if you have a question, go ahead and type it in the chat room right now. And we're going to go ahead and look at stocks, stock indexes, and crypto in this video. So let's get started. Let's take a look at, we're starting out with the DJI right up here on the top left, Dow Jones Industrial Average Index. So, what is happening right now? Let's mark 2020 and 2021. Okay. One thing we need to realize is that we are in stock earnings season right now. We're in stock earnings season right now. Okay. So we always want to be forward looking. All right, so I'm just marking. This is 2020 on this left side right here. This is 2021. Okay, we are still in a confirmed uptrend. How do I know this? How do I know this? Are we making a series of higher highs and higher lows in the price? Yes, we are. There's a simple tool called the exponential moving average. All right, once you put that up, okay, you can see that starting from basically 1 year ago, August 2020 is the confirmed uptrend for the Dow Jones Index. Starting from here, all right? Now, if we don't use any tools the old-fashioned way, you could still draw a trend line and see, like this, that the price in candles is still making an uptrend as such, okay? And we could draw a trend line on the top. What I like to do is I like to box the price in, so to speak. Because if you just look at a chart like this, it's like, okay, well, it's going up. Where are we going to go? So I like to box it in so you get some kind of resistance and support levels, like ceiling and floor levels. So pop it open, like such, close off the price. Now you can see that on a day chart, we're on a one-day chart, the Dow Jones Index is in this uptrend, but it's a large upward sloping wedge pattern, okay? Now, if you could see here in the circle, this is kind of that Delta COVID outbreak and earnings season combination right here. Because we tried to open, at least in America, we tried to open sort of in this time frame, past couple of months, and then Delta COVID cases kept increasing, and there's some fears related to politics and stocks, and then we had stock earnings starting around the end of July, right here, okay? So we know we're still in the uptrend, all right? But there are resistance levels where one resistance here at about basically 35,000, and the support level basically around 33,500 on the bottom side. All right, I'm going to erase the trend line, or I'm going to hide it now so you can actually see what I'm talking about. Okay, you can see it's just going sideways right now. All right, and this was the top before COVID started. All right, so then we mark that as a large support level. That's very significant. All right, so in short summary, okay, we have resistance and support. We're in towards the end part of the Q2 earnings season in America of 2021. All right, we'll switch to a weekly chart. Okay, we're talking a little bit more about investing now, long term. See this? Yes, uptrending, higher high, higher low, higher high, higher low, price, higher high, higher low, higher high, higher low. And now it's basically almost double topped right here in this price range from May to right now, May to August. All right, we're just starting a new month. We're starting a new week. So we want to really watch out for that. Okay, I can't make the definite call right now, but we're gonna see what happens at the end of this like next week or two because of earnings season ending, and it's the start of a new month in August. So you switch to a line chart, you can kind of see there's a potential for double top. So a bull case, okay, a green bull case would be, we have great finishing earnings, all right, and we break out from this price and we retest this and continue the uptrend because of COVID stimulus and government support and the fact that vaccines are being created for Delta variant and possibly other variants as well. Don't quote me on that, but I'm presuming medical vaccine companies are probably aware of that at this point. So that's the bull case, right? We could get a breakout, retest, and then the next significant resistance would be, basically in the $1,000 increments. 35,000, 36,000, 37K, 38K, and so on. But if we end up double topping, okay, in the market, then where would the support be? It would be, again, 33,500 if we end up pulling back down, right? Now, if this turns out to be a double top M, this, right, then we can actually measure that move. 5%. So in a really bad case scenario, we could drop all the way down to 31,500. Or in a really, really bad case scenario, all the way down to 30,000. But in my analysis, in the global politics right now, global world, we would have to have like major COVID lockdowns again for that to crash down that far, all the way down to these two levels. So I don't think that's going to happen right away, just for no reason, right? Because you see right here on the weekly chart, pulling back to candles, all right, you can see that the weekly support is basically 35,000 in this price right here. So I don't think it's going to drop significantly. We need some really bad. We need really bad COVID-19 problems for this to drop this far. So I don't think that's going to happen right away unless COVID goes crazy bad. But I could see a little pullback, right, at least down to 35,000 here, or a breakout up to 36,000. Okay, so very simple. But we need to watch out for earnings, which stocks we're looking at, and we're going to look at that a little later in this video after the indexes. But I like to use some free tools on stream so people, not everyone has to pay for stuff, the subscriptions and whatnot. So I just pulled this up, and we're going to look at some of these companies in a little while here. All right, so that's a basic analysis on DJI. Next, SPX. This is S&P 500. S&P 500. All right, it's going to be kind of similar to DJI. Dow Jones, so it's S&P 500 right here. Now it's a little bit steeper, okay? Let me start with the weekly chart so it's a little visually easier to see. All right, so again, you could draw, I like to use a line chart sometimes just to draw the trend line and then turn it off, right? So we're still in an uptrend. How do I know this? Higher high, higher low, higher high, higher low, high, low, high, low, high. There's only two ways it's going to go. It's going to try to make a higher high, or it's going to pull back to make a higher low. All right. Now the question is where? Where? We already have a support right here at $4,244. Now there's a temporary resistance at 4,439. All right. But this is a very healthy looking uptrend. Healthy. Even throughout earnings. Okay. S&P 500 did not get destroyed in earnings right now. So it's fine for now. Let me draw this upper trend line, lock the price in terms of resistance on the top, trend line resistance on the top. All right, so now where are we going to get our bull and bear targets? Our bull targets, all right, this uptrend continues. High, low, and let's say we do have a high, then 45.50 is the bull target. I have to change the color, so we'll save this for next time. Okay, bull target right there in blue. That would be what? 3% up, higher. All right, if we pull back down, let's say to this trend line support and maybe pierce it down, that would be somewhere like 4,351, 4,351, right? So this could be our bear target number one. Our bear target number two would be the support 4,245 down here. Okay, and bull target retest of 4437. Okay, I'm just gonna draw it on this side, just to keep a reference. All right, but very, very healthy. It's just right now, again, we're in earnings season. Q2 earnings season is coming to an end very, very soon. Just the last couple major tech companies right now. So again, weekly chart looking healthy. All right, daily chart. The difference with the S&P 500 is we're not seeing such a huge double top like in the Dow Jones, right? In the Dow Jones, you can see a double top sort of forming, right? On S&P, not really. So to me, what this signifies on the charts, the psychology, are investors and people are waiting just for earnings seasons to be over and for the Delta COVID status to slow down. Although, I'm just going to speak about COVID and what I'm hearing on the news, like from Dr. Fauci and like CNN website, is that, you know, he's saying that COVID-19 is going to get worse. And why? Well, let's think about it. Why for a second? Because, all right, so we have a vaccinated population and unvaccinated population, right, globally. We have people wearing masks. We have people not wearing masks. We have state governments. We have federal governments in different, basically, guidelines, suggested guidelines for, you know, communities gathering and mask guidelines and vaccine guidelines too, right? So, you know, the pandemic is still kind of going, right? It's not dead. Like, excuse me, the virus is not dead, right? The virus is not gone. It's mutating, all right? But the fact is, people are still going to work, right? Let's think about how many people, you know, are working and working versus not working. You know, it's just people are working, but they're having a hard time in life right now, is what the feel I'm getting from the world right now. All right, so how does that translate to stocks? Okay, we're not having maximum fear. We have a little bit of fear. It's not maximum fear like this, the original COVID crash. That's not happening, all right? So NASDAQ, all right, we're looking at tech stocks now. Okay, we're starting on a weekly just because the month ended. We could even look at a monthly, all right? So we have been in a monthly uptrend for 1.5 years. 1.5 years. All right. Now, what I'm seeing here is just already from experience, yes, there's a little bit of bearish divergence on the weekly. So when is that going to actually pull back? We have yet to see. All right, but the same similar analysis, but the trend line is going to be a little steeper and higher this time. All right, so you can see here, we have a trend line. It's still higher highs, higher lows. High, low, high, right? So it looks like the question is the weekly higher high, where is that going to be? Where is that going to be? So right now we have a $15,000 resistance ceiling up here. All right. Now if we draw the upper trend line, this is kind of interesting to see. Right? That one works as well. Okay. Or, you know, in the past, we were in a bit of an ascending triangle. So this old trend line here, acting as support. Very interesting. You see that? We were in a weekly ascending triangle pattern. Now we're breaking out. So this is a critical pivot point test. Pivot point test right here. All right. High, low. There's the double top, but then finding support, tightening up an equilibrium, breakout, retest, and now we're here. So to me, this still looks like a larger wedge pattern as such. So bull targets has to break 15,000 to break to the upside. Bull targets to the upside. All right, but if we bear target down, bear break down, then 14,206, I'm really looking at that level to play off of. Okay? It's not impossible. Not impossible here. Not impossible. Okay? To see what's happening in this market high low, right? So again, playing off these two levels. Bull target 15,000. Bear target supports anywhere from 14,200. So we're basically stuck between those two levels. But again, if we're looking at divergence, yes, we did have a little bit of bearish divergence on the daily as well, but that ended up finishing and now bouncing back up. Okay, but it's still a little bit of weakness here. All right, on these oscillators down here. Let's move along here. Russell 2000, we'll do this one real fast. All right, so this is a analysis from a different class, but basically right now for this whole year, Russell 2000, the smaller business index, has been consolidating to the right. Stuck in the price range between 2,122 and 2,365. All right, those two levels here. Those two levels. Alrighty. So before we move on, just want to say thanks so much for following, watching, and subscribing. If you like this stock chart analysis, go ahead and give me a follow here on YouTube and Twitch. Really appreciate it. I'm a real person. I'm a real human being giving you free education right now. Let's get it. All right. So Russell 2000, all right, on the day, consolidating sideways. All right, but on this weekly chart, there is a more extended possible double top. It's a little dirty, but right here, I'm talking about this spot right here at 2,352 and 2,340-ish, right? That's why I pulled back. I called this in a different stream like a month ago, okay? Exactly to my levels, exactly. I said we're going to pull back down here and retest this. Exactly, that's what happened. All right, so where are we going to go next? Again, this is not healthy. Why? Because the uptrend is over for now, and then we're going sideways. Whenever you go sideways in the market, that's bad. Why? Because it's indecision. Indecision. You want a clear up or down trend. In COVID-19 crash, we crashed down. In the recovery, we bounced up. But when we go sideways, that's suspicious. All right, so we're just stuck between these two levels, 2365 resistance up here and 2128 support on the bottom here. Now, if this turns out to be a double top and if something really bad happens with COVID in the world, okay, I'm not saying this is going to happen, but at a worst case scenario, all right, if this happens, you know, we could pull back all the way down to 1909 in a bear case scenario. If COVID goes really, really bad, okay, then we're probably going to pull back down negative 10%. But we're getting Delta COVID vaccines. Again, Delta COVID vaccines in development, all right? And we're in Q2 earnings season at the end here. So we could also bounce up 5%, so that would be healthy. All right, but the fact that the Russell 2000, which sometimes, in my opinion, is a leading indicator, right? Because the Russell 2000 started crashing a little harder and faster than like the S&P 500 Dow Jones, in my opinion, because of what the index is. So when we go sideways and rewinding, NASDAQ is not going sideways. S&P 500 is not going sideways. Dow Jones is going a little sideways, right? So there's some clues there about what's happening in the market, all right? Okay, I'm just going to do this one really fast. The VIX, the volatility index, based upon S&P 500 options. All right, I'm looking at the weekly chart because I'm more of a longer-term trader and investor. Okay, I don't really do day trading because that's controlled by bots and algorithms. And although there are opportunities sometimes day trading, like we see in the new meme stock rush this year, but for the most part, I don't really do day trading or IPOs. I do established companies, so there's a higher chance of profiting longer term. All right, so all I'm going to do on the VIX right here is, okay, so we see here that the VIX has this resistance on top, and then it was finding support on the bottom as such, and we had a little bit of pop-up on this latest COVID little baby mini crash that happened in the past like 2 weeks or 3 weeks ago. All right, so we popped up, and this trend line is very strong on the top for the VIX. Okay, so it hit that and pulled back down, but it's not over yet. Okay, it's not over yet. The market's a little mixed right now. Is this a possible upside down head and shoulders? Maybe, maybe. If it is, all right, that would be pretty significant pop up for the VIX. But if it's not, then this could easily pull back down. So it's a plus or minus 25% on the index, which is normal for the VIX. All right, so basically we're just stuck between those two levels, $22.43 and $13.12. And then there's a midpoint in there as well, about like 17.15-ish, 17.50 range. All right, so VIX, we don't need to analyze it so hard. It's just, we just did the indexes. All right, if you have a stock request or a crypto request, please go ahead and type that in the chat and I'll analyze it on the charts here. Okay, the DXY, the dollar currency index for US dollar. Okay, now I'm not going to do the whole long story on this because I'm already going 22 minutes here. So basically what happened is the COVID crash, just rewind. The COVID crash, okay, the dollar did fall, but then people started selling all their stocks and, we had a rally as well. This is COVID, the crash and the bounce. Okie dokie. Now, long story short, basically, we were downtrending in the DXY, which has an inverse reverse correlation with the S&P 500. So if the market's going up, the DXY would be going down. Why? Because people are spending their money. They have cash on hand to buy stuff. What do I mean by stuff? They're buying stocks. Stocks, bonds, crypto, meme stocks, day trading, IPO, whatever people believe in, right? Companies they believe in, they're putting their money there instead of holding it, right? So DXY, that's why that happens. But the problem is we did double bottom on the charts. Where? Here, 89.53, okay? And we did rally, I'm looking long term right now, up to 93.50. Here, 93.35. So now we're stuck in between these two large ranges. I'm going to draw a parallel channel because it's multiple touch points. There we go. Now the price makes more sense. Now we're not in such a hard downtrend on the dollar, right? It's consolidating sideways. It's the more sideways action. So what does that mean? Nobody really knows the exact future of COVID-19 mutations, right? But I'm thinking long term, okay? Presuming this is not the end of the world right now, that 5, 10, 15, 20 years from now, presuming that America is still alive and well and businesses are still well 5, 10, 15, 20 years from now, is the stock market is probably going to continue to go up over time, okay? It's that theory, all right, that the market will continue to grow over time. Unless we have like catastrophe that stops everything in the world. But, I'm hoping that we have enough technology and brain power to solve our problems right now. But the way this affects the stock market, again, this could be a very large W pattern. It's possible, right? If we switch to a weekly, yeah, you see it here. W double bottom. Now, the problem is instead of breaking up, we broke down, all right, because the market, S&P 500 went up. So this is a very, this is a very suspicious looking double bottom for the dollar currency index, because this is very clear, this side. Low, high, low, high, low, downtrend. That's a definition of textbook downtrend. This is a textbook double bottom, but we did not break above $93. There's a resistance right here. All right, so it's very simple. There's two levels. I'm going to be watching 93.34, or three levels. 91.38 at 89.42. All right, just the top, middle, and the bottom support. Because if this falls down and starts breaking down, that means the market is going up, up, up. If this starts breaking up, then that means the market is going down, down, down. All right, so it's just something to watch. Okay, next. Gold. Gold. All right, this is from a different class, but again, the play-by-play on gold. All right, so as the coronavirus crash happened in 2020, March 2020, 1.5 years ago, we uptrended in gold. What does that mean? People bought gold. They bought gold. They sold their stocks and they bought gold because that's safe. Safer. Right? As an investor. Boom, 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 up. Then downtrend as the market's going up. People are saying, you know what? I don't need this gold anymore. Stocks are going to make me more money. Last year, they were true. And then we found a support. Why did it stop here? Because, why did it stop at $1,674 on gold? Because there is the support. And I drew it in this large blue. Temporary support. And it's the bottom of a trend line support as well. So it's like an X marks a spot. I love it when that happens. You see right here is an X. Let me draw it. Why is this brush so big? Make it smaller. That's just the size. Okay. So the X marks the spot right here. Literally. The trend line meets the side diagonal line meets the horizontal line. And if you just visually draw it, okay, that's where you like put your alerts and stuff or your buy orders. Right? If you're this is just financial no, excuse me. This is just educational, it's not financial advice. So if I was trading this, I would be like boom right here. Saying, okay, X marks a spot, bottom of the trend line support, diagonal, this diagonal line. It's right at the horizontal support. Okay, risk on. I'm not all in on this. I'm just putting a little bit of risk in my trading account. And where would the first target be? The first target would be the top of this trend line, okay? And then it exceeded the target. So this is a 2-to-1 trade here. There was one. It ended up going 3-to-1. 4-to-1. You risked 3%, you would have made 12% if you, but you know, that really, no one's going to do perfect trading like that. So probably only going to get half, right? 6%, which is still amazing because the S&P annual average is 10% a year. So if you make 6% in a month or 2 months, you're doing really, really good in terms of average index. Okay. But the play-by-play, what happened? We broke out, we rallied, and bulls and everyone's saying, yeah, let's go gold, okay? Up to a resistance level was a little trickier to see, but it's there. All right, and there's hanging man candle pattern on the top here. Okay, that's a bad sign. I want a weekly now, so maybe if we zoom in to the daily chart, you can see. I'm looking at the price right now. So yeah, there's this kind of rounding curve action. And how I like to visualize this is like if you throw a ball up into the air, all right, eventually, if you throw a ball up into the air, eventually at some point it's going to top out and pull back down before it comes and bounces like this. Right, like if you throw it and it hits the ground and it's going to bounce, 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 bounce. Right, so when you get a rounding top like this, a little bit suspicious. Right, very, very super sensitive traders might say like, oh, head and shoulders with the downward break. Okay, but that's very, very sensitive. But what happened? Broke out. We had a double bottom, which is also, right, another super confirmation. Uptrend, if it wasn't obvious enough. Then a rounding top. Pull back down to where? The top of this trend line support right here. With another almost double bottom. And now we bounced up. All right, so it basically hit the 50% retrace in Fibonacci. It's a little more advanced, but I'll show you. It's still, you can still do it. Right, if you Fibonacci this, oh, hit the 618. So traders love that, right? Boom, and we're playing between these Fibonacci, hidden Fibonacci levels in the price. Okay. Another way to look at it is if you just use simple pivot points, right? If you want a simple tool, pull up the pivots. pull up the pivots, back it up. You could see the support levels here. So it went from this pivot point here, the white pivot point, to this pivot point here, broke down from the pivot point, hit some support levels, back up to the pivot point, and now we're stuck at the pivot point, right? So that's just one of those automated algorithm tools you can use. But even if you didn't have anything, just the old-fashioned way, I'm kind of old-fashioned on the charts. I like to keep it simple. I like to keep it simple because, you know, all I'm going to say, all these, basically, there's like hundreds of tools on TradingView and charts, and like I study them all. I tested all of them, and I just use the ones that I know work. The ones I know work time and time again. Then it's just about my emotional discipline and control and my like mental skills of, can I identify patterns and put on the trades, right? Like more than half of trading and investing is just all mental, emotional control. And can I recognize, do I understand what is happening? Like if you just look at this price, do I understand what's happening? On the left side here, okay, long term is, I'm just gonna let me bring up a different chart. I don't want to erase this. Let's bring up the GLD ETF. Okay, even if you don't understand candles, you put it to a line chart. This is gold ETF in America. Do I understand what's happening? Well, it's uptrending. Higher highs, higher low, higher high. That's kind of hard to see, but we'll use a weekly chart. Yeah. Higher high, higher low, higher high. That's uptrend. This side is uptrend. Textbook, it's not super perfect clean, right? But it's still, we're going upstairs. That's how I like to think about it. We're going upstairs. And then we had a pivot point here exactly 1 year ago. Resistance. Then over time, we kept making lower lows and lower highs in the price. That's textbook downtrend. This side, I'm going to cut this in half right here. This side is textbook uptrend. This side is textbook downtrend. The first half of this year. Right? But now the problem is right here is very suspicious activity. Why? Because we broke this pattern and tested it. Bulls and traders really want gold to go up. That's what they want, okay? Because they want this to be a larger downward consolidation pattern into a reversal into a higher high, right? That's what they want. That's what traders are trying to look for. But that would also mean that something bad has to happen in the stock market. So it's very mixed. This could still break down. If this starts breaking down, it's like, okay, we're still in the downtrend, right? So you want to watch out for that. The immediate, if you're looking for prices, okay, these are the 2, 3, 4 immediate price ranges on the GLD ETF. All right, so 178, we're stuck at 170, 164, and 157 in dollars. So we'll see. I'm going to go faster now. Sometimes I analyze too much, but that's why my calls sometimes are usually more correct than other people's that I see online. That's why I'm giving away this free education. Here we go. So silver is different though. You can see we're in a large consolidation sideways pattern. Okay, sideways. Right? Silver's more tricky. Silver's more tricky. But basically we're stuck in a larger parallel channel here. And I marked these 3 levels, okay? I know people are watching my stream on YouTube because it goes, and because technical analysis works, the charts. It's hitting these levels perfectly. I drew this like a month ago, literally. That we're hitting this resistance. There's basically there was a wedge, ascending triangle pattern here, but I said if we break down, we're hitting this level, the middle heart line, and if we really, really break down, hitting the bottom side of this. Hold on, my stream is having problems. All right, my internet was kind of crashing there. If something's technically wrong, just let me know in the charts. I mean, in the chat. Just let me know in the chat if it's like the video or the sound or the connection is messed up. All right. So these levels still hold. Again, we're longer term traders, longer term investors, so I don't need to flip flop my ideas every 2 seconds. All right. I'm not a day trader. I don't like doing that. Because I'll just talk about why I don't do day trading IPOs for like 30 seconds. Because the bots and algorithms, right? How am I going to beat $1 million computer algorithm that can execute buy and sell orders faster than I could even think? Faster than I can even click the numbers, what stock and price, like the bot is already trading it. So that's why I do not do day trading, unless my only exception is when you get global FOMO. What do I mean by that? When every single person in the entire world, day traders, is trading, like 3 months ago, AMC, GameStop, then I'm in on that. I'm gonna get in on that action because the bots, they're not gonna be able to keep up with millions of people on the opposite side of their orders. That's what happened. The short squeeze happened, right? The hedge funds, the bots, the algos, they got destroyed by retail traders if retail bands together. But, you know, in just your normal day-to-day operations, the bots are probably going to win. That's why I don't day trade, and that's why I don't do IPO trading. Anyways. So silver, again, there's a problem here on silver, is that, right, we're not on a super end anymore, okay? It's sideways consolidation, try to double bottom, try to, you know, uptrend, and then we had a head and shoulders right here, and people are saying no. So that's why this could be a problem on silver. Yellow up or down 10% on silver. That's the call right now. We're going to this blue line on the bottom, or we're going to the top of this blue line right here. That's it. That's it. Very simple. Very simple on silver. All right. All right. Hold on. My stream. Is it because I'm doing Restream IO? Having some internet connection problems right now. Just gonna pause for a minute for my connection to stabilize. Alright, it says it said green health. Alright, so I'm just doing an announcement while I'm waiting. Alright, thanks so much for watching, following, subscribing, everybody. If you like this free stock charts and crypto charts analysis, go ahead and drop me a follow on YouTube and Twitch. And if you have any stocks or cryptos you want me to analyze, go ahead and type that in the chat room, in the chat box. I know my internet's a little bit dodgy now, so I'm just going to keep going here. I don't know why it keeps dropping. YouTube. It's, yeah. Okay, so now it's green. That was strange. Sometimes it happens. I guess it's that time of night. Everyone's trying to like watch Netflix or something like that. Watch YouTube and Netflix in the neighborhood. Okay. Let's do these last two rapid fire. U.S. oil and U.S. natural gas. All right. This is, why is this chart messed up? Oh, I'm looking at log scale. No. All right, this got messed up. All right, so we're looking at U.S. oil right now. If the internet's connection is bad, just let me know. I'm not sure what's going on here. It keeps going yellow and red. Stream health. So, anyways, we're looking at the U.S. oil ETF. Okay, we're looking at the U.S. oil ETF. And we have been in an uptrend on oil after the catastrophic COVID-19 crash back in 2020. I remember this was absolute insanity in the oil market and ETF trading. Absolute insanity. Right? We finally found this bottom here at the end of April because of government stimulus package that's going to save the market and the economy. Alrighty. Now, we are still in this longer term uptrend. I'm switching to a weekly chart now to see the uptrend. It's easier to see. Higher high, higher low. Higher high, very higher high. Higher low, higher high, higher low. And it's trying to establish another higher high. But now we have this resistance at $51.11. The lower support is 44.86. There's the midline support 47.69. On oil, we have this trend line here, right? That was pierced and tested. But the problem is the price action on oil going to turn to a double top and pull back significantly? Maybe, right? There is a little X marks the spot here at 49.20. Range down to 49 or 47. So basically like $48 is probably going to be that support general range. Okay. But this is like textbook resistance breakout like this. So for example, we had a rally on oil, pull back down, and then retest that ceiling right here at 31.52. Then breakout, then pull back. And now the resistance is here. 44.64, then up, breakout, then pull back to test that resistance. Test the support down here, then bounce. Now will the same thing happen again for the third time? $51 is that resistance right now, but I could easily see in a bull case, okay, is if we break up and up, right, and then retest back down at 51.36 on the trend line at this X marks the spot, right? That could totally happen. Completely. We also have gap resistance up here. I'll draw it in the box. We have a gap resistance up here, right? In stocks, gap resistances are fairly strong resistances. So that looks like it's going to be the target, $60. Looks like it's going to be the target. Alrighty. Looks like it's going to be the target up there. All right. So again, bull target anywhere from between 51 and 60, which is basically 55 intermediate target on the upside. Okay. And then, but if we pull back down, if this turns out to double top and everything starts crashing, then 44.79 is going to be the that support on the bottom side. Okay. Very simple. All right, UNG. Now UNG, we're still on the weekly chart as investors, all right? UNG, there's a literal textbook upside down head and shoulders here that basically completed the first leg. Left shoulder, head, right shoulder. Candles, yep, textbook right there. Okay, let me erase everything so I could draw it for you. Okay? I love seeing this setup. Why? Because there's such a high chance of profitability. Great, much greater than 50% in my opinion once this plays out on a weekly chart. Okay, I'm not saying it's going to keep going up, but I'm saying this bottom though is very suspicious because again, you had textbook ever since 2019. UNG ETF, natural gas ETF, in a confirmed weekly downtrend. But again, it's kind of like gold and silver. What are they trying